Welcome to Illuminati Silver. We tell the truth about silver. Today is Wednesday, the 4th of November 2020, and this evening we shall be providing a midweek financial update. However, with the US elections still in the balance, we thought we would share what is actually happening at the moment and what financial industry experts are expecting. So let's take a look. Now we have two Reuters reports to read to you, not very long. One primarily concerning the United Kingdom and what's been happening here, and the second the United States and world markets in general. What is noticeable is that with the election verdict still in the balance, equity markets are marginally positive, while gold and silver prices have fallen, albeit not a great amount. More of that in a few minutes. Let's take a look at what Reuters have to say this morning, and we shall play both articles back to back. Reuters article dated November 4th, 2020, updated at 10:18 GMT plus 1. Headline: Weaker pound lifts FTSE 100 as US election race goes to the wire. London's FTSE 100 rose on Wednesday, helped by a weaker pound, although gains were capped as early results from the US election showed a very tight race between Republican President Donald Trump and his Democratic challenger Joe Biden. The blue-chip FTSE 100 index jumped 0.7% in a choppy trading session as sterling fell more than 1%, boosting dollar earners such as British American Tobacco plc, Experian plc and Rentokil Initial plc. Bank and mining stocks fell after leading a surge earlier this week on bets that a decisive Democratic victory would pave the way for more economic stimulus. Trump on Wednesday falsely claimed that he had won the election, with millions of votes still unaccounted after Biden said he was confident of winning a contest, which will not be decided until a handful of states complete vote counting over the next hours or days. The market was kind of fixated on this blue wave scenario, and now that expectation has been disappointed. There's no certainty, and the market really doesn't know what to push at this stage, said Andrea Ciccione, head of strategy at TS Lombard in London. After falling nearly 0.9% in early trading, the domestically focused mid-cap FTSE 250 was up 0.6%, after a report said Britain and the European Union negotiators would call for more Brexit negotiations. Separately, financial data company IHS Markit said Britain was heading for double-dip recession this winter, as business surveys show economic growth almost halted last month, even before the latest England-wide lockdown was announced. Among individual stocks, Provident Financial plc rose 2.8%, after the doorstep lender said collection performance in its home credit business has now aligned with pre-pandemic levels, with the company set to meet market expectations for this year. Marks & Spencer Group plc rose 4.8% after the retailer posted a smaller than expected loss for the first half. End of article. Reuters article dated 4th of November 2020, updated at approximately 11:10 GMT plus 1. Headline: Analysts' view: World markets whipsaw on knife edge US election. US stock market futures struggled for direction amid some wild swings, while longer-dated Treasury yields buckled on Wednesday as results from the US presidential election proved far closer than expected and investors geared up for extended uncertainty. Early in the count, betting markets flipped from having for months assumed a win for Democratic challenger Joe Biden to suddenly price a high probability President Donald Trump would keep the White House. But as votes continued to stream in, they've jumped back in favor of Biden in recent hours, and many investors think it's still too close to call. There are also doubts about whether the Democrats will take the Senate from Republicans, undermining pre-election betting that a Democratic clean sweep of the presidency and Congress was likely, complicating the likely passage of a big fiscal stimulus package after the result. counting to get a final result, could take days at least. Comments. Marvin Barth, Head of Foreign Exchange and EM Macro Strategy, Barclays, London. Quote, markets appear to have leapt too quickly to assume another Trump upset, but it is still too early to call. This leaves us in election limbo, awaiting the result, and the longer it drags on, the more likely we are to go towards a contested election. We think this suggests more risk aversion and a pickup in volatility. We're already seeing the former but not the latter. Riskier currencies are underperforming, and the US dollar and US treasuries have rallied, and we think there's more of that ahead. Unquote. Valentin van Nooivoyschen, CIO, hope I pronounced that correctly, of NN Investment Partners, The Hague. Quote, there is clearly a tighter race than expected on the presidential level, and also in Congress. One of the early takes is that the blue wave is out of the way. That is pretty clear. The potential read-through already from that, in terms of the fiscal policy outlook, which will be differently shaped, will also be smaller. That will almost be a certainty. In terms of market impact, what seems to be the most significant so far is the rally in US treasuries. Those two come closely together, because this is one of the few close to certainties that we have. The most important driver there is Republicans holding on to the Senate. Thereby the fiscal package of 3 trillion will not be coming through. And in the composition of the package, it will be less focused on state aid or infrastructure spending and more focused on corporate tax cuts. I don't expect any comments tonight, but with less fiscal stimulus, the Fed will have to remain more dovish for longer and again weighing on yields. Unquote. Simon King, CIO, Vermeer Partners, London. Quote, frankly, I wouldn't be investing in any political polling companies anytime soon. I doubt anyone will be paying much attention to those again. Unquote. Rick LaSalle, Global CIO, State Street Global Advisors. Quote, we expect quite a lot of market volatility. However, the core investment conditions that we see for the next 12 months won't be reversed by this volatility. The monetary and fiscal stimulus that we've seen so far to counter the pandemic is yet to work its way fully through the system, and we expect that it will be one of the big influences on investment conditions in the next 12 months. From an investment perspective, high-quality equities and staples are expected to do better, while areas like healthcare will still do well, particularly if Congress is likely to be split and there is a need for a lot of consensus building before more radical policies take root. We should avoid outright bets, for example, on renewables or the oil and gas sector. We should also position ourselves for a bit of a lower dollar and a little bit more in terms of medium-term inflation, as we are in a deflationary environment. There are conditions which, with monetary and fiscal stimulus in place, are favourable towards equity investment in the medium term. We should also bear in mind that the volatility that this presidential election still can cause, as we wait patiently for a final result and a risk budget, is very important. And there we shall leave it, as there are numerous other comments from other industry experts. End of article. Well, one thing is for sure. Do not trust polling companies. This race is incredibly close, and for those who were critical of controversially Greg the other day, when he said that in his view the race will be very tight, with Biden marginally winning, those people may have to eat their critical words. So far, he's got the incredibly tight bit right. But it may be many hours, if not days, before an outright victor is declared. Now, we fully accept these prices could change, but gold is currently trading at $1,892, having been as high as $1,916, and that was yesterday. And silver is trading at $23.75, again being as high as $24.51 yesterday. The advent of a smaller than expected stimulus package moving forward has put upward pressure on the US dollar, which is marginally up, and downward pressure on precious metals. But, as mentioned, this situation could easily reverse, especially if the election becomes even more contested, and if the Supreme Court is called to judge. Either way, do please share your thoughts below. Let us know who you think, with the election being so tight, the victor eventually will be, who that will be, whether it'll be Donald Trump or Joe Biden. And a reminder to you that we will be producing a midweek financial update later this evening. Thank you for listening. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.